Hi and welcome back to Debt Tale. In today's video, we're going to be talking about the tax reporting for third-party payment processor and the changes coming in 2024 and beyond. Really quickly, we're going to be going over the changes that might affect you. So let's get started. As a quick reminder, first things first, I am not your personal professional. Please don't take this as legal or tax advice. This is just for educational purposes only. All I did was go through the IRS website and the different third-party processors' websites in order to just compile some of their policies in regard to these changes. And so this is accurate as of December 28th, but it is possible that there will be additional changes. So please check with those third-party processors to see what the policies are at the time that you use them. What were the changes to IRS reporting requirements? The American Rescue Plan Act of 2021 changed the way that third-party processors had to report income to the IRS. So they used to generate these forms called 1099-Ks, and previously the threshold for that was anybody who had processed over $20,000 or had more than 200 transactions in that year. However, this new Plan Act changed that threshold from $20,000 needing to be reported to now being $600. And the news stations went crazy over this because $600 from $20,000 is a significant difference. And so it was very confusing, and the infrastructure wasn't in place yet to determine whether or not everybody then who used these third-party payment processors were going to be getting these 1099-Ks. So there was a delay, and then there was another, and now currently, as of November, they have changed it yet again. So it is now on a rollout plan, so the threshold is going down year by year until it hits that 600. So for 2024, the threshold is a minimum of $5,000. Then for 2025, that threshold is then $2,500. And finally, 2026 forward, it is at that $600. What do I mean by third-party transaction reporting? So when you use third-party payment processors, so Venmo, Cash App, PayPal, Stripe, they act as a third party for that transaction. So they have your customers log in and they go on that payment processor, log in and then pay you. And then that payment processor then takes that money and then sends it to you. So it's not like a direct as if they had just given you your credit card, etc. Now this can also be applied to online marketplaces. So think of like Etsy or eBay. And I really want you to note that this is not an exhaustive list. There are a bunch of other apps and online marketplaces that are third party processors. I was just listing some of the bigger ones, the ones that have been getting the most media attention right now. Now, when that threshold gets hit, so for 2024, that's $5,000, then that company, that third-party processor, is required to issue a 1099-K, and that is issued not only to you, but also to the IRS. So the 1099-K just lists the gross amount. So that is the total amount. It doesn't take into account fees and other things like that. It's just the gross income that you have potentially processed through that third-party processor. It also reports the total number of transactions that occurred and whether or not if state or federal income taxes were withheld. Some payment processors do this, some don't. You have to check in with the bylaws of that particular processor. I don't know. And then you'll also get a monthly breakdown of the gross per month. So really quickly, it's just a form that they generate that has just gross amount. It's called a 1099-K. And you get a copy and the IRS gets a copy, and dependent on your state, sometimes the state gets a copy too. So really quickly on the screen, here is an example of a 1099-K form. What does that mean? So essentially, this form now being reported to the IRS is letting the IRS know that, hey, you might have additional income that you need to report. That is the basis of it, and it became a very alarming thing in the news because the threshold was originally $20,000 and then all of a sudden now it's $600, and so people who use Venmo, Cash App to pay friends, family, etc. were all of a sudden super worried that now they were going to be having to report this income to the IRS and that it was going to cause a big headache. Which is potentially true and why I decided to make a video to cover it. Are all transactions counted for in this reporting. So technically, what is supposed to be reported are transactions for goods or services. So technically, this can get small businesses, it can get actual businesses, it can get solo entrepreneurs, people who are doing side hustles, etc. So it is possible that it could span a wider reach of people than it had done previously with the old threshold. But it's also possible that it could get casual sellers. So people who are selling their stuff, things that could have been like old clothes, potentially reimbursements, etc. And that's what the news was trying to capture, as they were worried that all transactions were going to be covered. And technically that's not true. It's only supposed to be for goods and services. What about the money that you got from friends and family that was to split a bill, cover a meal, or act as a gift? So technically those transactions are supposed to be considered personal. This reporting does not require that personal transactions be accounted for within them. Birthday gifts, holiday gifts, splitting meals, splitting a taxi cab, etc. Those are considered personal and shouldn't be reported. And those are not taxable events, meaning that that is not considered income to you. They're considered reimbursement. Now, some apps at the time of making a payment actually ask whether or not you are paying for goods and services or if you are paying friends and family. And so at the time of you paying someone, you have to designate which one you are doing. So that is one way that these apps were trying to classify what is considered personal and what would be considered a business. What about personal stuff that got sold? So this one's a little bit trickier because technically it is on the person to determine whether or not what they sold was at a gain or at a loss. So if you had sold something that you sold for less than what you originally purchased for, then that would be a loss and you would have to adjust for that if it gets reported. However, if you bought, say, old furniture and you flipped it and therefore you fix it up and now it is worth more, so you sold it for more than what you paid for, then technically that is a gain and that is an income and that is therefore generally taxable. So if by accident you get that 1099K and it is determined that those were actually just things that you had sold for less than what you originally paid for, then you can do an adjustment for it in order to make it not taxable. The way to do this is you're both going to report the payments, but then you're going to make an adjustment. So you're going to use Form 1040 and then you're going to use a Schedule 1. The other way to do this is by filing a form called 8949. And it's titled Sales and Other Dispositions of Capital Assets. And then they'll also get you a Schedule D. Again, reminder, I'm not a tax professional. When you are sitting down with your tax professional or when you are filling out like TurboTax or whatever, it will determine whether or not you qualify to do these adjustments, and then it will auto-populate those forms for you. But just letting you know, like, those are the forms you would have to use in order to do an adjustment to make sure manually that you are not paying income tax on what was perceived as income when in fact it was not. What if mistakes were made or there were miscategorizations when I received my 1099 form? Well, that is the big question. Right now, we don't really know what's going to occur other than technically the third-party processors have to have processes in place in order to reissue corrected 1099K forms. However, the IRS does urge that you still need to file and you can't just wait for that corrected form. And right now, we just don't know exactly the processes they're going to go through in order to do it. What I will note is that a lot of apps are paying attention to what the buyer is classifying that purchase as. So you might not be able to necessarily get people to change what they had selected, and that might be a different process altogether. And you need to really pay attention to those terms and conditions when you use these apps and accept these type of payments, because they might have additional affidavits that state that once your buyer selects an option, they can't change it. I don't know, that keeps changing. Literally, I had to stop this video and re-record it because they changed some policies. So you have to pay attention. What about Zelle? So As per Zelle, on their FAQs, they're not considered a third-party processor. They don't really hold your money. They just act as a way to get from point A to point B, and they were funded and founded by a bunch of different banks. So it's not considered a third-party processor, so therefore they are not required to issue 1099-Ks. So that is one thing to consider, and one thing I know a lot of people have been going like, oh my goodness, do all my Zelle payments count? Technically, no, they're not required to report it. They are not subject to this rule because they are not third-party processors. It's exempt. It is basically a technology that facilitates bank-to-bank direct transfers. What is Cash App doing? So this gets its own question and its own separate answer because Cash App changed the way that they had done things. And so really quickly, and this is based off of their FAQs at the time of this recording, so December, that they do not count the stuff and will not report if you have a Cash App personal account. However, if you have a Cash App business account, then yes, that will hit the thresholds and that will be the requirement to then issue those 1099-Ks. So what do I mean by that? Well, when you select and make an account with Cash App, if you select personal, any of those transactions you do or any of those transactions you receive to yourself, then would be considered personal, and you did at the time of signing up for this account stated that yes, the money that is being transferred to you or that you are transferring is for reimbursement purposes, is for gifts, is for holiday stuff, things that are considered personal and generally not taxable. You also agreed with a personal account that your transactions are for non-commercial uses. So as of right now, I don't know if there is any sort of punishment or any sort of thing where if you misclassify and you accidentally have a customer send you something to your personal Cash App versus your business one, etc. Now, if you had signed up for a business account, then all those transactions are considered for commercial purposes, and that's the way that Cash App kind of separated what gets classified as what. So if you have a business account, then you want to make sure you're not paying family and friends then with that business account, because then that would count as a business commercial transaction. What do I do if that 1099-K is wrong? Again, kind of similar to the other question, right now we don't really know what the process is for those third-party processors in filing corrected ones. We do know, however, that the IRS does not want you to wait for the corrected in order for you to file your taxes. Instead, they suggest that you follow the same methods of using the 8949 form, the Schedule D, and just kind of like have an manual adjustment within that tax form. And you can have like a little statement there of like why you're doing that. That is just to prevent the delay, because as of right now, we are in uncharted territories. We don't know how long it's going to take these processors to then file and amend these corrected 1099-Ks. Do you pay taxes on the whole amount reported on the 1099-K? Generally, no. So again, the 1099-K just gives you a gross amount. It does not take into account fees that you might be paying for your processor. It might not be accounting for things that are considered taxable or not taxable. So dependent on the state or what type of goods or services, you might have some services that are not considered taxable and some that are considered taxable. So it depends, and it's really a good idea to have a tax professional in your corner to help sort that out for you. Another thing that it doesn't take into account is refunds, and that's another big one. So again, be nice to your bookkeepers, be nice to your tax professional, have them help you sort that out so you can determine really how much of that was grossly reported is actually the net that you actually earned. I didn't hit the threshold of $5,000 or $2,500, but I still got a 1099-K. What gives? So with that, there's actually some state-specific reportment requirements as well. Some states are already at a lower threshold or at the 600. Some of them are based off the number of transactions. So the third-party processor will know whether or not you are subject to a different threshold based off of the state in which you are doing business in. And so they handle all of that. As of this recording, there's a couple of states who are already at that 600. But if you live in one of those states, then you are mandated to follow that threshold. So yeah, I hope you found this video helpful. I know that there was a lot of alarm up in the news about it, so that's why I wanted to make sure I touched base about it, especially because it was supposed to be in effect of $600 starting in 2024, but then November 27th is when the IRS said, nope, we're going to do another phase in. It's going to be $5,000. And that was really quiet. It was like in like the footnotes of an announcement, and it was somebody who had asked in my 2024 tax video about it. So thank you, that person, because that helped me think I should probably make this video as well. And yeah, if you have any questions that I can answer, please drop it in a comment down below. As a reminder, this is all new as well. So if I can't find the answer, I will just let you know. And again, I have no affiliation with any of those processors, so I can't tell you their processes because I'm not an employee there. I don't know it. I just go based off of their FAQs that they've posted on their websites, as well as their terms and conditions for what I can find online. But there's also additional ones always that, again, I don't have access to. I was just trying to a quick, succinct video that kind of covered that, so you don't necessarily have to go crazy looking for it on your own. But still, if you are worried about a particular payment processor or an app that you use, then definitely look into their terms and conditions and figure out how they're doing things. Please do me a favor, give this video a like, share it with a friend, because I'm sure there's going to be more questions about this. For those of you who are subscribers, thank you for being subscribed and tuning in again. I really appreciate that you are giving me your time and still watching these videos, because it's super cool. And for those of you who aren't subscribed, consider subscribing. I try to break down personal finance topics like this. I can't guarantee on a weekly basis right now, but hey, I'm trying to get them out as I can. And I'll see you in the next video. Bye.